Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, December 6th through Friday, December 10th, 2010. Well, folks, we are looking back to all of last week. I want to start there and then formulate our opinions for next week based off history. And again, we've pretty much been dead on this market. We talked about how going into the Christmas season, even to Thanksgiving, it wasn't likely they would let this market collapse because of Black Friday and the shopping that goes on then. Plus, now up until Christmas and New Year's, you have tons of shopping. There is no way the Fed will allow this market to drop drastically unless there's a catastrophe somewhere in the world. That's the only thing that could happen, which would create an instability that the Fed could not control. So again, we saw that this week. Monday, we came in with more jitters in Europe, and sure enough, the markets initially sold off. Monday was the only day of the week with two POMOs, permanent open market operations by the Federal Reserve. The first one was smaller. You can see a little bit of a bounce right here. The second one was the big one right here. And look on Monday, the move up in the markets. And again, permanent open market operations is basically QE2. QE2, again, divided into small amounts, is called POMO, permanent open market operations. They go in, the Fed goes in, buys treasuries from the institutions. The institutions get the money injected into the markets, or again, that amount of money flowing into the system continues to weaken the dollar. So again, beautiful right there, recovery. Markets basically closed flat. The next day, more jitters. Market gap down again, but POMO coming to the rescue. The dollar starting to top out. And again, we called for a top out in the dollar. I went slightly negative on the dollar early in the week. That was a dead-on call. We saw the dollar collapse the rest of the week. And again, once the dollar starts to drop, folks, there is no way this market's going down. Not at all until it gets to a certain point, which is so far below current levels. Then the market would obviously not like it. But right now, a weak dollar is good for the market, and the Fed knows it. They're creating an asset bubble. They're continuing to pump money in to create that artificial asset bubble so the average American thinks they're wealthier by seeing their 401ks go up, even though their buying power is actually declining. And sure enough, then they go out and spend money, run up more credit card bills, starting to create that next bubble we will have to deal with in 3 to 5 years. All right, so again, that worked perfectly this week. Notice Wednesday, big gap up and a move higher. Thursday up, and Friday was a very sideways day until late in the day when they pushed the market up again. The dollar continues to drop these last few days. Take a look at the UUP chart. Very, very obvious to see exactly what happened here. Look at the dollar decline Wednesday, Thursday, and Friday right here. Clear and simple. Notice the market went in the opposite direction. Market went like that when the dollar goes like that. Clear as a bell, folks. And again, as I talked about to my premium members of the Research Center, and again, for $49.99, it is the cheapest by far, the most priceless value to any investor or trader out there. We give swing trades. One of the top swing trades this week was TORM, over 20% gain just in 1 week. Actually, it was in 2 days, but we won't go into that. We had calls on oil on the bullish side, JP Morgan on the bullish side, nailing them left and right. And again, very unbelievably profitable week this week, and it will be the same next week. We're already having setups and putting stuff on the hot charts and alerts, which is part of the Research Center at inthemoneystocks.com. Again, you subscribe to the Research Center. Doesn't matter what you subscribe to, you get everything included underneath that Research Center. Go to In the Money Stocks and check it out. All right, so again, dollar declining drastically. That's what props the market up as the Fed continues to inject money. And believe it or not, Bernanke on 60 Minutes is going to say that he's not opposed to QE3. I've been saying that for months now to expect QE3, QE4, QE5, same thing, folks. It's going to continue. The reason why? Because the market is not going to recover strong enough to pull away the drug from the addict. Remember, the market and the people in the market that are trading the market are addicted to QE, quantitative easing, which is injections of money. Think of it like injecting something into your vein as a drug addict. You cannot just pull it away. You pull it away, this market's going to collapse. They know they have to continue to do it. This is what's going to just infuse the bigger bubble down the line. And yes, it's going to be a major catastrophe, but you know what? We're going to trade it up right now, down, up, down, up. I'm going to swing trade it left and right. We're going to make money, and then when the fall comes, we'll make money then too. That's the beauty of what we do here at In the Money Stocks. Trade the market, doesn't matter what it's doing. There's always a trade to be had. Spiders again, folks, talk about trend lines. Take a look. Friday, in the last 10, 20 minutes of the day, you rally up to the red line. What's the red line? The red line is the double top. You pierce the double top and pull back underneath by the close. So again, you get above it and then come back, and that's where we see this market closing into the end of the day on Friday. This sets it up for a very interesting week next week. My projections right now are showing basically a neutral bias in the early portions of the week. Maybe by Wednesday we have a small pullback, possibly as early as Monday, but sometimes Monday the volume is too light. But look for a minor, and I mean minor here, folks. I'm not talking about anything big. There's a possibility Monday, Tuesday, or Wednesday to have a small pullback. I'm not sure if it'll happen Monday or Tuesday, but one of those days. If we move up Monday, then look for it on Tuesday or Wednesday. But watch for a small pullback early in the week and then a neutral to upside bias the remaining portion. And again, just continue to think that way as long as no catastrophes happen. This is so key, folks. I said this to my traders in the intraday stock chat. I said this to my research center members in the research center. Basically, you have a situation that the Fed can control the markets. Pure and simple, they're controlling the markets as long as nothing drastic happens all over the world. The only time you see this market go down is when you have a catastrophe in Europe, like Ireland getting bailed out, and then Spain, Portugal, Belgium, Italy next on the radar, and it's coming back fast and furious, or you have North Korea bombing South Korea. Those type of things, that's out of the control of the Fed. They cannot do it. The amount of money that flows to the markets or out of the markets at that point when that happens is bigger than the POMO the Fed has at their disposal. So in those cases, the Fed has to just step back. They can prop a little bit, but they usually just step back, let the market fall, and then the next day when it quiets down, like we saw midweek this week, once it quiets down, they'll just shoot the market right back up. So again, it just tells you that there's not a very good likelihood at this time. Now in the future there will be, but at this time there's not a big likelihood of a major sell. Could you have a down day of 100, 150, 200 points one day? Sure. Some event happens all over the world? Absolutely. Will they rally this market back probably within 2 days of that if things quiet down? Yes, they will. So understand that, folks, and here's a beautiful example of it. We see the chart right here on the 10-minute. We can go to the 60-minute. I want to show you this. This is a very important line. Take a look at this orange trend line right down here. Starts over here. And look at how the market, and this is something we were watching via the Research Center nightly videos, which again are 30 to 40 minutes in length. I was going over this level, and I said, listen, if this level holds, don't expect a breakdown in this market. And sure enough, the technical level right here, all the way across, it hits it right here, hits it again there, then there, and there. You can see clear as simple, it does not break down. Market again, gaps, then goes all the way back up right to a double top. It's actually a very pretty chart. The symmetry of it is amazing. You have a sharp down move, then choppy markets in a tight range. Here's the range up here, and here's the range down here. Then you gap above the range and break out, and you complete the symmetry of the move. The markets are unbelievably amazing in that symmetric nature. All right, daily chart I'll quickly just look at, just so you can see it very clearly. I love it how it hit on the 50 moving average and the trend line. This is the major trend lines on the daily chart. You gapped above the 20 right here, and it was a gap and go, or what we call a river theory, which is again proprietary techniques you will learn in the Research Center, folks. You learn all our techniques that we talk about in the intraday stock chat in the Research Center. Obviously, if you want the extra stuff, the hardcore stuff that the institutions get, that's in the webinar, which again we do about once every month, every 2 weeks or so. All right, so that's what we have there. The dollar, again, looks like it may stabilize. Notice the dollar is down here to the 20. If the dollar pierces the 20 on Monday, or even now going into Monday, that's part of the reason why I'm thinking there could be a small pullback in the markets. Again, very small. You have support at the 20 and right below it right here. So somewhere in this range, if the dollar is, you could start to get a little bit of a bounce on the dollar, in which case this market, again, would pull back just in a very minor way. All right, what else do we want to look at here? I think that's all on the UUP chart. The USO continues to sky high. Take a look at the USO here, and we have all our trend lines in, obviously. Appears to the double top right up here, closing right at this level. If I zoom out, you can see what key level that is right there. We'll continue to watch that. I will give out trades via the oil trade next week. There will be trades to be had if this continues to trade in the fashion that I think it will, so be ready for that as well. And the GLD, again, what an amazing day on the GLD. If you go to the intraday GLD, let me just zoom that up. Look at the move that gold has had back up. Why? Because Europe's in a catastrophic mode of having to bail out everyone. The U.S., you know the Fed is going to do QE3 essentially now, so quantitative easing 3 is coming. That's more printing of money. Everyone's printing of money. The only thing that can't be printed is really gold. Therefore, gold is a safe haven. If gold gets to a double top at 139, a little bit of a short scalp or a 1 or 2 day swing trade can probably be initialized. I may wait close to the 140 even number, though. We'll analyze that, and this will be another possible call next week. And again, you need to join to get these calls, folks. Research Center Center, you'll get everything except for the chat room, but that's okay if you're not an intraday trader. But the Research Center for $49.99, the amount of money alone that was made last week was probably about 100 times that for the average Research Center member. I mean, it's astounding based on the calls that were made, all winning calls. All right. Again, come join us. Watch for next week. Economic news will be a little on the lighter side. We will be watching very closely for the technicals, and we will relay all key calls via text message and email alerts. Take care. Have a great rest of the weekend.